US cash markets are closed, so we are reading futures. The S&P 500 and the Nasdaq both flat at their last close. The Dow holding steady as well. Not much conviction ahead of the open.
Nick, flat doesn't tell the whole story. Gold closed at 4,604, and that's where real money is flowing. Precious metals haven't budged either, which suggests investors are genuinely uncertain about what comes next.
That's a fair point, Victor. Uncertainty would explain the stillness. But usually flat markets hide divergence underneath. Are we seeing that in the sectors, or is it genuinely broad indifference?
Energy tells you something different. West Texas crude at $86, Brent at 92. That spread between them is real. The market's pricing in supply, concerns that equities haven't priced in yet.
So the bond market and commodities are already pricing risk that stocks haven't caught up to. That's the real story, and it's one the open will have to reckon with. This is a breaking market alert. Bitcoin just took a $155,000 sell print at $77,136. That's nearly 100 times the typical trade size. It hit the tape about a minute and a half ago, and the market absorbed it immediately. Bitcoin's realized volatility sits at 32% over the last 24 hours, but the actual price range has only been 1.9%. That's a massive gap between what the market experienced and what it priced in going forward.
The real story is Solana and XRP. Solana's realized volatility at 87% dwarfs Bitcoin's, yet the range is only 4.5%. Something doesn't add up for the next 4 hours.
Victor, you're saying the volatility we saw doesn't match what traders are pricing for what's coming. That's either complacency or we're about to see a sharp repricing.
Or it means intraday noise isn't predictive. XRP's realized volatility hit 127% with a 5.6% range. That's exhaustion, not momentum. We may see consolidation, not continuation.
Fair point. The gap between realized and implied tells us the market's not bracing for the moves we just watched to repeat. Bitcoin's buy side has pushed nearly 4 million won against 2 million on the sell, a spread that puts cumulative volume delta firmly into bullish territory. That's a 32% swing in Bitcoin's favor. Ethereum tells a different story, entirely nearly 27 million in negative delta, meaning sellers have dominated consistently. The divergence is stark.
But Nicholas, Ethereum's delta deficit came despite buy pressure of $1.7 million. The question isn't whether Bitcoin is strong, it's whether Ethereum's sellers are taking profit ahead of the broader move or signaling real weakness.
Fair point, Victor. Bitcoin's largest print was a $126,000 sell, yet buyers absorbed it without hesitation. That's confidence. Ethereum hasn't seen comparable institutional testing of support.
Or it means Ethereum traders are already positioned and waiting. Bitcoin's typical trade size sits at $1,700 against 6,000 total trades. That's retail participation, not conviction.
Then why is Bitcoin's cumulative volume delta climbing while Ethereum sinks? That's not retail noise, that's capital choosing sides.
This is a breaking market alert. A $275,000 Bitcoin buy just crossed the tape at $77,279. That's 99 times the median print size. The order was absorbed immediately. XRP is leading gainers up nearly 5% to $1.50, while Dogecoin climbs 3%. Solana extends its rally, gaining 2.25% to $95. Bitcoin holds steady above 77,000, up 0.33%. Ethereum advances 1% to 2437. Chainlink is the only loser, sliding less than 1% in today's session. Thank you everyone and welcome to America Decides. I am Nicholas Brooks, Senior Business Anchor, alongside Victor Bennett. Policy, politics, and what they do to markets for the next hour. Across the top 10 crypto assets, longs are paying shorts roughly 11% a year in funding. That's the cost of holding a leveraged position, annualized. Bitcoin, Ethereum, Solana, all the same rate. The market is pricing in sustained bullish sentiment.
But Nicholas, 11% annualized assumes these rates hold steady. They reset every few hours. When sentiment flips, longs get crushed paying shorts that premium in reverse. We've seen it happen in weeks.
You're right that it's volatile. Yet what matters now is the signal longs are willing to bleed that much to stay long. That's conviction, not noise.
You're crowding. A one-way bet always looks convincing until it isn't.
Fair point. But the fact remains, capital is flowing one direction, and it's costing the winners real money to do it. This is a breaking market alert. A single $90,000 Bitcoin buy executed 53 seconds ago on an $82,000 print. The trade was absorbed. Sellers held firm throughout. Bitcoin and Ethereum together now control nearly 70% of crypto's total market value. That's the tightest dominance we've seen in months. The altcoins are getting squeezed out as capital consolidates upward.
The numbers do show concentration, but the total market dropped 2.5% in 24 hours. Are we really seeing strength in the majors, or just panic rotation away from everything else?
Victor, there's a difference. When capital moves to Bitcoin at 59% dominance during a downturn, that's risk-off behavior, not weakness in Bitcoin itself. The smart money is choosing the safest exit.
Fair point, but Ethereum's share fell to 11%. If this were genuine conviction in the majors, We'd expect both anchors rising together, not Bitcoin rising while Ethereum stalls.
You're right that Ethereum's lag matters. But Bitcoin holding dominance above 59% during a red day tells us where institutions are parking cash. That's the signal worth watching. Bitcoin has realized 32% volatility in 24 hours, but it's only moved a $1.90 range. That's the calm story today. Ether's at 60%, realized against a 3.6 range. The real move is at the edges.
XRP tells you something different: 131% realized volatility, but a 5.6 range. That gap says traders are pricing in moves that haven't landed yet. Why is implied so far ahead of what actually happened?
Victor, that's the leverage question. When realized lags range that badly, someone's holding positions they believe will break one direction hard before the day closes. Solana's at 87%, realized with a 4.5 range, closer to balanced. The spreads tell you where conviction sits.
But realized volatility that wide on XRP and Solana, without the moves to back it, that's a warning signal about rollover risk into the next 4 hours.
It is. And Bitcoin staying tight at 32% suggests it's become a hedge while the alts shake loose. That's where your real range lives for the next cycle. This is a breaking market alert. A single $803,000 Bitcoin buy just hit the tape at $77,177, a 99 lot absorbed in 43 seconds. Good to be with you. America Decides starts now. Nicholas Brooks here, along. Good to be with you. America Decides starts now. Nicholas Brooks here, alongside Victor Bennett, and our focus this hour is policy, politics, and what they do to markets.
Bitcoin buyers came in heavy this morning, pushing nearly $70,000 net into the asset across 369 trades. That's a 24% advantage for buys over sells. But look at Ethereum, even stronger momentum there. $127,000 of positive flow. Something else is happening in the alts.
Ethereum's numbers look impressive until you look at Solana, Nicholas. Sellers have overwhelmed that market by nearly $150,000. That's a 37% deficit. If alts were moving together, we wouldn't see Bitcoin and Ethereum surging while Solana implodes like this.
Fair point. So the narrative that crypto is rallying as a block falls apart. The real story is institutional money is being selective. Bitcoin and Ethereum are absorbing capital. Solana is being liquidated. This divergence tells us something about confidence, or the lack of it in certain ecosystems.
Does it though? Or does it just tell us what happened in the last hour? Solana's weakness could reverse on a single large buyer. What matters is whether this flow pattern holds through the week or whether we're reading too much into intraday noise.
You're right to push back. But when the two largest assets move decisively one direction and a top 5 coin moves decisively the other, that's not noise. That's capital allocation making a choice. This is a breaking market alert. Bitcoin just absorbed a $155,000 buy print at 77,300, nearly 70 times the median trade size. It hit the tape just under a minute ago. Across the major crypto markets, longs are consistently paying shorts right now. Every asset from Bitcoin to Cardano is charging nearly 11% annualized in funding rates. That's a substantial transfer of wealth from buyers to sellers, and it suggests positioning has become severely crowded on the bullish side.
Nicholas, those rates are uniform across 10 different tokens, which tells me something different. When funding is this identical everywhere, it points to structural exchange mechanics rather than genuine market stress. How much of this is actually positioning versus algorithmic averaging?
Fair question, Victor. But uniform or not, 11% annualized is real money leaving long holders' pockets every year at this pace. That kind of friction only persists when conviction is this lopsided.
Conviction or complacency? The next funding reset is less than 15 minutes away. These rates reset constantly in crypto. What matters is whether they're sticky or they collapse back to baseline within the week.
If they're collapsing, the crowding problem solves itself. If they hold, we're watching a market that's pricing in risk buyers aren't adequately hedging against.
Bitcoin's realized volatility sits at 32%, but look at the spread below the surface. Ethereum's already at 59%, and Solana's pushing 88%. The range we're trading tells you where the real pressure builds next.
XRP's realized volatility is running at 128%, Nicholas. That's more than 4 times Bitcoin's move. If altcoins are this far ahead of the implied range, aren't we looking at a compression play, not an expansion?
Victor, that's fair, but XRP's range is only 5.5% wide. Wide volatility in a narrow band means the move's already priced in. Bitcoin still has room to run.
On what time frame? The candles show 25 periods across all 4. Which direction breaks first?
Ethereum. It's caught between realized and implied. That's where the next 3 hours settle the question. Gold at 4,600 sits at levels we haven't seen since the Fed signaled patience on rate cuts. Silver and copper are following the same script. These metals trade on what the central bank does next, not on mine output or jewelry demand. West Texas crude holding near 86 and Brent at 92 tells you the dollar is still the story here. A stronger dollar makes commodities more expensive for overseas buyers.
But Victor, the dollar index hasn't moved. The euro is flat at 1.167 against the dollar. What's really shifted is real yields, the gap between treasury rates and inflation expectations. That's what's pulling gold higher, and it's not the same as a Fed pause at all.
You're right that real yields matter more than nominal ones. But those yields only compress if inflation stays sticky or the Fed moves faster than market's price. Gold at 4,600 already prices in some of that. Where do you see the real money flowing next?
Into copper. Industrial demand from China hasn't rolled over yet despite the slowdown talk. If the Fed actually cuts, copper should outperform gold because you're betting on growth, not on inflation hedges.
That's the key divergence, then, whether we are hedging inflation or pricing growth. The metals market is split on which story wins.
This is a breaking market alert. Bitcoin just absorbed a $92,000 sell print at $77,176. That's nearly 48 times the median trade size. The print went through 2 minutes ago, and the market held. Bitcoin is trading at 77,268, sitting comfortably above its 200-day moving average at 76,454. The 21 is at 77,149. RSI is firm at 56, and we are seeing higher highs and higher lows, the structure that matters for continuation trades.
Nicholas, the volume picture troubles me here. Your technicals stack beautifully, but volume hasn't confirmed this move. Meanwhile, Ethereum's RSI sits at 56 as well, yet it's the trend strength index reads 30 stronger trend confirmation than Bitcoin's 26. Are you reading these as equivalent setups?
They are not equivalent, Victor. Ethereum's moving average stack is tighter. The 50 at 2,442 sits closer to the 200 at 2,405. Bitcoin's 50 is at 76,766. That gap matters for scalability. Gold, though, that's the real concern. It's printing below its Bollinger Band lower at 4,606, RSI at 43, and the MACD rolling over.
Gold broke below 2,404 on the 200-day and now sits at 4,604. The squeeze is real, but support at 4,529 is holding. One close below that level, and we are testing 4,500 flat.
You're right, 4,500 becomes the line. If gold gives way there, that's a different market entirely.
The cash market is closed, so we are reading futures across the board. The S&P 500 holding steady at 76.77. The Nasdaq flat at 29,311. Holding pattern ahead of tomorrow's data.
Nicholas, but look at the metals. Gold and silver, both locked at their previous close, while copper hasn't budged either. That's not holding pattern, that's genuine indifference. Where's the conviction?
Fair point, Victor. The energy complex tells you something sharper. West Texas crude at 86.35, Brent at 92.41. Oil's not indifferent. It's waiting. Natural gas down to $2.80 suggests nobody's panicking about supply.
The currency markets matter here. The euro holding 1.167, the yen at 159. If we see real conviction tomorrow, those move first. The indices follow. You're reading the symptom, not the disease.
Then we watch the open. Equities will price what the bond market decided overnight. This is a breaking market alert. Bitcoin just absorbed an $80,000 sell print at 77,160. That's a 42-block trade. It hit the market 4 minutes ago, and the buyers stepped in immediately. Bitcoin buyers have put in $2.16 million against $1.3 million on the sell side, giving us a positive delta of roughly 850,000. That's a 24% advantage to the buy flow. But Ethereum tells a completely different story, Victor.
It does. Ethereum's flipped it entirely 1.57 million in buy orders against 2.17 million in selling. That's a $600,000 deficit, down 16%. Why the divergence when both assets are supposedly correlated?
The largest prints are telling us something. Bitcoin's absorbing those massive buys without breaking 37 times the median trade size on the upside. Ethereum's seeing sellers come in at that same price level with comparable size. It suggests selective strength, not a market-wide conviction.
Nicholas, Ethereum's cumulative volume delta is still deeply positive at 4.6 million, though. The recent prints matter less than the position we've built over time. You're reading noise.
Fair point on the cumulative picture. But when the flow diverges this sharply on any given session, one asset is telling you something the other isn't. Right now, Bitcoin's saying conviction. Ethereum's asking questions.
Bitcoin has now absorbed nearly $3 million in net sell flow. The largest single print was a $150,000 sale at $77,110, and that block moved without breaking price. That tells you something about the depth underneath.
Nicholas, it did move without breaking price, but the cumulative delta is deeply negative. We're down 2.19 million in cumulative volume delta. One absorbed print doesn't erase the structural selling pressure we're seeing across the session.
Fair point, Victor. The buyers are still outgunned on a session basis. But the fact that 53 times the median trade size gets absorbed at a single level suggests institutional demand is still present, even if retail is lighter.
Institutions absorbing that block doesn't mean they're accumulating. They could be hedging or rebalancing. And the median trade is only $77. We're reading one giant print against noise.
That's the distinction worth making. The real question is whether that absorption at 77,000 holds as support, or whether we test it lower in the next few hours. From all of us on America Decides, thank you for watching. The editorial is next with Andrew Sinclair. Thanks, Nicholas Brooks. This is the editorial. Andrew Sinclair with you, alongside Victor Bennett, and we are looking at the house view. This is a breaking market alert. Bitcoin just took a $150,000 sell block at 77,114. That's 60 times the median trade size. The market absorbed it 3 minutes ago.
Desk closed 26 trades across intraday and swing. 54% hit rate, but that means 46% didn't. Expectancy of 0.61 R per trade, which matters more than the win rate. 2 Bitcoin shorts hit targets. 1 Bitcoin short stopped. Ethereum short is in profit. The yen expired flat after 9 hours. Bitcoin took a 0.2% loss on the intraday long that closed.
Your expectancy figure assumes those backtests hold going forward. Bitcoin intraday tested across nearly 800 bars shows 0.17 R per trade, and swing shows minus 0.81. Andrew, those are very different animals from what the desk is running.
Victor, the backtests are on older data and different entry conditions. What matters is live execution. We are at positive expectancy on the live record, and 2 of the last 4 closed targets prove the methodology works when price cooperates.
2 winners in 4 closed trades is 50%, not what you want to lean on. Your open Ethereum swing is carrying 8% risk. 1 stop trade at 2% risk loss, and you've used a quarter of your swing allocation already.
Position sizing is deliberate. The setup met our criteria. We are live, transparent, and we'll report the result when it closes. Across 10 major tokens, longs are paying shorts 11% annualized on funding. That's the cost of being long in this market, and it's uniform across Bitcoin, Ethereum, Solana, the full spread. It tells you something about positioning.
It does, Andrew, but 11% annualized on a weekly funding cycle means shorts are extracting real value right now. What's the flow look like if we strip out the megacaps and look at where that money's actually moving?
Victor's right to push there. The uniformity itself is the story. When every asset funds at the same rate, you're not seeing genuine price discovery, you're seeing crowding. Long positions have become consensus.
Consensus is another word for vulnerability. If longs are this crowded at these funding levels, the next liquidation cascade could be brutal.
Which is precisely why we are watching the next funding reset in under 8 hours. If rates hold, crowding gets worse. If they don't, we'll know shorts finally had room to breathe.
Trump's positioned a multi-million-dollar bond bet that hinges on Kevin Warsh's policy direction as Fed chair. This matters because it signals how the administration expects interest rates to move, and markets are pricing in that expectation already.
But does Warsh actually change the trajectory? Or does he inherit constraints the previous chair couldn't escape? Bond markets have their own momentum, independent of personnel.
Victor, you're suggesting the bet's partly theater. Fair point. However, Zcash jumped 48% to over $800 on Grayscale's spot ETF push. That's institutional money flowing into assets previously locked out of traditional vehicles.
A 48% jump on what volume, though? Zcash trades a fraction of Bitcoin's liquidity. The real question is whether Grayscale's move legitimizes the asset class or just concentrates risk among retail traders chasing the narrative.
Both happen simultaneously. Washington's pushing crypto clarity through the legislative route. When regulation arrives, that's when the actual repricing begins. Equities are flat across the board, the S&P 500 at 7677, the Nasdaq at 29,311. Gold holding at 4604. But here's what matters today: crypto's moving while everything else sleeps. The dollar and the VIX aren't confirming the move, Victor. That divergence is the risk.
The euro's unchanged at 1.167. The yen's steady at 158.98. But you're right that crypto's divorced from traditional volatility signals. When assets decouple like this, what's your read on whether this breaks the other way when equities wake up?
It breaks hard if equities gap lower on open. Gold's stability suggests real money isn't panicking yet. The metals are telling us no systemic fear. Crypto's rally looks orphaned, Andrew, disconnected from the fundamentals moving everything else.
Copper and silver flat with gold, but crypto's gaining without macro conviction. That's not a trend. That's speculation, finding a vacuum.
Exactly. When the vacuum fills, the question is whether real rates spike. That kills both crypto and equities at once. This is a breaking market alert. Bitcoin just absorbed a $53,000 sell print at 77,186. That's 27 times the typical trade size. It hit the tape 45 seconds ago, and the market took it without flinching. The positioning data tells a different story than the price action. Bitcoin sits nearly balanced 52% long, 48 short. But move down the board and you see aggressive retail conviction. Ethereum's nearly 65% long. Solana hits 70%. XRP pushes past 74. That's real crowding.
Those are the stated positions, Andrew, but funding rates don't reflect panic. 11% annualized on longs is expensive, yet they're holding. The question is whether this skew represents confidence in fundamentals or whether retail bought the narrative after the move.
Victor's right that holding through that cost matters. But XRP's 24-point skew is the risk. That's not positioning, that's positioning that needs an exit.
If it corrects even modestly, that crowding becomes forced selling. We've seen it before, and it always ends the same way.
Which is precisely why the moves that matter next won't come from retail conviction. They'll come from where the real money repositions. Bitcoin's 21-day moving average sits at 77,159. The 200 is at 76,469. Price is above both, which matters. We're in a stacked structure, higher highs and higher lows. RSI is neutral at 54.